deep if all debts are not paid.
So I'm President, and we're talking about the United States of America today. So as you can see here, we have one of the most iconic skylines in the world, and that is of New York City, which is how much you actually know about the superpower giant in the world today, just how much you know about their tax system. And that's what I'm here to hopefully enlighten you about today. So what you do need to know first off is that the United States tax system is very big, it's very cumbersome, it's very unwieldy, it's very complicated and unintuitive in how in comparison to other countries today. One such example of this is that in New Zealand we have goods and sales tax automatically included in the price of our products. However, in America they do not have the GST tax already inclusive upon their prices, so you have to add that on top of what you're already paying or what's displayed. Much like in New Zealand, employers withhold the taxes from payments from their employees to make it easier for them to file their taxes. However, even though they have this starting point, they do still have, the employees themselves still have to claim that this is what their deductions are already made. However, if they don't do this, then they're in breach of their tax liabilities already. As a result of this, the tax system in the US requires a huge amount of input to be kept running, and there are a certain number of deadlines throughout the year which has to be met. For example of this, on the 11th of January, so it is one of the first major deadlines, and that is if you are in a job which earns money largely via tips, then you as an employee have to file a form called 4070 by the 11th of January. If this is not done so, then you are in breach of the contract. Another example of this, on the 29th of February, businesses must submit a form called 1099 or 1096. These are about business transactions that aren't tips or wages, such as hiring a contractor. But this is only, you have two separate forms, one if you're filing in paper or one if you're filing electronically. They're not, unfortunately, the same, even if it is the same subject matter. Now on to the actual tax rates themselves, when that is. As you can see here, there is a bunch of different categories which you can fall under, which makes it, at the moment there are currently 5 different categories, but this is very fluid at the moment, and it's very easy to get confused when you're doing it. On top of this, there is also standard deduction rates. These rates, much like the tax rates themselves, apply depending on your situation as an individual. If you're married, if you're single, or if you're a spouse, etc. These deductions are taken off straight away from the amount of tax you pay every year. And on top of this, even though you have the standard deductions which are taken off, you have the individual deductions which could be taken off if you meet some of the following conditions. For example, if you are blind, if your spouse is blind, if you're over 65 years of age, or if your spouse is over 65 years of age. If you have these, you can take a further deduction. However, that expands even further, and that if you're married or if you're single, you have 2 different rates for it. On top of this, again, because everyone loves how complicated the tax system is, if you are single, you flat have a $1,400 tax reduction straight away. Just like Australia, the United States of America has capital gains tax. This is, as Lofting has already explained this, I'm not going to explain what the capital gains tax actually covers, but so in 2015, the United States government spent $3.7 trillion throughout the year. Of this money, $3.2 trillion was paid for by the taxes of the members of the state, and the rest of it was paid by loans. Of this tax spending, 24% of this was spent on Social Security. This is amounted to $888 billion. This was provided mainly monthly retirement benefits to retired workers, their spouses and children, and any surviving children and spouses of deceased workers. Disabled workers and eligible dependents also covered by the Social Security tax. 25% of this $3.7 trillion, which is $938 billion, was paid to the health insurance programs. This largely covers either those who are disabled or those who are over 65. Unfortunately, unlike New Zealand, there isn't really any ACC in the United States. $602 billion was spent on the defence and international security systems. This is a bulk of this reflects the underlying cost of the Defence Department itself, and also this also includes the cost of supporting operations in Afghanistan and other related activities. This funding was $74 billion for that. The safety net program put in place by the government kept 38 million people out of poverty based on the census done in the United States in 2015. It is calculated that if these systems weren't in place, the poverty rate would have been around about 27.3% versus the actual 15.3%. Now, what do people actually think about their tax system in the United States? Based on a national survey with a small number of people, so it's a grain of salt, however, it does show the underlying views. 64% of those surveyed think that corporations aren't actually paying enough, and 61% say the same about wealthy people. 44% of those people asked believe that the complexity of tax system is just too great. To give you an idea what corporations are paying for taxes, we could decide above. Just to give you some context while you're looking at these, Level 3 is a telecommunications and internet service provider. United Continental is an airline. American Airlines is an airline. GM stands for General Motors, which trades in the automobile industry. And Hewlett Packard is an information technology company. 40% of the people surveyed believe they're paying too much, and 53% believe they're paying just the right amount. The tax system gives the impression that the country itself operates on every man for himself system, with opportunities to increase their own personal benefits with careful tax planning and structuring, leading to sometimes bizarre tax scenarios in which you can literally be owed tax even though you made a profit. This is driven further by the lack of medical coverage, but by the government, unless you exist in a sweet spot from which support does exist. We were asked the other day, the question was, what are the problems that can be caused by the difference of tax rates in different countries? So, one of the main issues if you're an accountant and you have to deal with tax rates, it just means you have to change how you do your tax calculations depending on what country you're in. This means you have to do quite often an extra course as you go through to actually be qualified to do an accountant in each country. Now on to John.
While most societies shape their tax policies based on local values, there are places where it is the tax that shapes the culture of the country instead. My name is Joshua, and I'll be telling you why Monaco is one such place. The Principality of Monaco is one of the few remaining city-states left, despite being the second smallest country in the world, which is actually located inside France geographically. It still has its own monarchy and set of laws. In 1968, the Monte Carlo Casino was opened on the orders of the royal family. At this point in time, Monaco was deep in debt. However, with the collapse of the Second French Empire, the laws that previously stopped a diplomat such as the Prince of Monaco from operating a gambling house were now gone, and taking advantage of the new French railway, they finally had a way to clear their debt. The Monaco Casino thrived and created a new pool in the tourist industry, allowing for the country to attract greater business ventures, dig itself out of debt, and start reinvesting in infrastructure. It managed to open the Oceanographic Museum and the Monte Carlo Opera House, and the casino was so successful that 11 years later, in 1969, Monaco could afford to abolish income tax for its citizens. Since then, the lack of income tax, and often business tax as well, has reshaped the face of Monaco. While it was already a tourist spot, it has now become a very attractive place for the super wealthy. Seeking the obvious opportunities, much of Monaco's industry began specializing in high-end products in order to cater to and profit from their new rich citizens. The previously already booming hotel industry became even more expansive and luxurious, and jewelers increased in number fivefold. Providing the best for the right price has become a national speciality. Government policies on tax now reflect how the money flows in Monaco. With income tax and business taxes only presented as exceptions, they still have a 20% value-added tax rate. This, like our own GST, allows them to gear their taxes towards buyers rather than sellers. As almost all business in Monaco is geared towards tourists and the super rich, this allows the ordinary citizens to operate at a minimal tax rate while the government generates income from others. Modern Morocco's population is comprised of roughly 30% millionaires and billionaires. It has the world's most expensive real estate, has the world's highest GDP per person, and the only nation to get higher than 1 on the Human Development Index. It also has record lows of unemployment and poverty rates. Monaco is an anomaly in the relationship of tax and culture, but clearly demonstrates how fundamentally they can shape each other. Taxes help to guide the citizens of Monaco to enrichment and show them a clear path to what it has become today. It has become clear over research in this topic in general of tax and culture that taxes are a reflection of the people at large. In small countries where the government is trusted, taxes are allowed to, and even encouraged to be high, as there is a belief that the government is responsible and she'll take care of them as long as they provide enough funds. In larger countries where there is a need for self-reliance and taxes are geared towards evasion as opposed to inclusion, there's often a feeling of distrust and disconnection from the central federal government. Altogether, this means that for ourselves, going forward, it is really up to us to decide whether we trust our government enough to increase taxes and provide greater benefits to ourselves, or whether we feel that we would be better served by keeping that money and providing for ourselves. Thank you very much.